Alright, welcome back to our channel, MegaWhale team. Thanks for tuning into another video today. Today's video is going to be a Bitcoin update. We're going to be talking about the bear market, talking about where we think the price is going to be heading from here. We're going to be going over our bottom predictions one more time and talking about what are the chances of us fully reversing this trend here and going into a parabolic bull run. A lot of misinformation on Twitter, a lot of different opinions, everyone's on the fence. We're going to try to summarize it, clear it all up, and give you our most accurate and honest opinion on where we think the price is heading. So if you're new to the channel, remember to like, comment, and subscribe. Let us know down below, how long you've been in crypto, what you love about crypto, what you hate about crypto, and how you're handling the current sideways action. Again, like always, you can follow us on Twitter and Telegram. The links are in the description. Let's get stuck into the video. So first and foremost, what I do want to point out is usually we do have this gray box, and I've got rid of it today because I want to kind of keep the chart nice and simplified. But for those of you who are watching the other videos, the gray boxes kind of indicate these support and resistance zones that I kind of have on our chart. So I've kind of removed everything from the chart today except a few lines to keep it nice and simple. But this is basically a strong zone of support and resistance. I'm going to bring it back up because I want to show you that we're kind of getting back into that zone. And if you've noticed on that smaller time frame, we're rejecting and we're closing, and we've got that daily candle basically opened up within this zone again. So we didn't really close that candle above the zone, which is first and foremost pretty bearish, and our first bearish indicator. We can see this zone acting as a lot of resistance and support through the history of Bitcoin. I do want to come over and I want you to just take a visual image of this pattern. This is what we call a symmetrical triangle pattern. Just to summarize it, a symmetrical triangle is two converging trend lines which are basically one ascending, so one increasing, and one decreasing as time continues. So you have this converging pattern. Basically what happens in a symmetrical triangle, they're essentially neither bearish or bullish. They're quite long-term consolidations lasting about 3 or more weeks. This has been about 3 months. So we do have that confirmation that we are in an actual symmetrical triangle, but we have two symmetrical triangles. We have one where the price will enter from the top side, which generally, not always, but generally leads to a drop after. And then we have the symmetrical triangle where the price enters from the downside, which generally, once again, not always, but generally leads to the price continuing. It is not uncommon to see price action happen and occur like this, so we have this fake breakout and continuation downwards. So what I'm expecting to see here now, we do have to assume that since we are technically in this bearish symmetrical triangle, we have to assume that the price will continue downwards, all right? Until we get confirmation, I'm going to quickly summarize what we've been talking about in the last few videos. Until we get confirmation of $47,000 to $48,000, until we break this zone here, until the price gets over, well, I don't know what that just happened. Let's go back to a horizontal line. Until we get over this 2 red lines, so we'll break it out of here. Until we get over the zone, the price is technically still bearish, and there's still a possibility of us going downwards. So even if we get a spike upwards, we can reject from there and continue downwards. So I am optimistic. I'm cautiously optimistic. If the price gets over here, I've been telling you guys for months, we told you guys to sell around over here. We've been telling you we're in a bear market ever since. And we've been telling you literally since like around over January, maybe even sooner, that until we reclaim $48,000, we are bearish. We are very much bearish, and that's kind of what's happening here. So reclaim 48,000. I want to bring up this coin here, Ape. Obviously, Ape's been talked about a lot, and you can see a similar pattern formed on Ape. All right, we had this symmetrical triangle. We led into it on the downside. We had our test. We had that fake breakout. It didn't quite push over this resistance zone that it was in, and it faked down and crashed. All right, so I just wanted to bring that up to show you an example of what we're seeing here, and this is probably a prime example that's played out in the last few days of a similar pattern where we have this long consolidation. It could go bearish, it could go bullish. People are kind of on the fence. We have this fake breakout, and then we continue downwards. All right. If the breakout does not break over this range, when it does break out, if it does break out, we are not bullish. Remain bearish because a crash could come. Until we flip that zone, I would remain bearish. All right. That's enough about that. Let's move on to some of the technicals for this chart. And we were talking on the 1 hour chart, and we're in our Telegram channel. We told you guys yesterday, in fact, we were telling around 11:30 a.m., which was around about here. And we told you guys, look, the market is losing strength. I'm going to bring up the You can see where it is over here, somewhere around over here. Here we go. Bitcoin is starting to look weak unless we get a rapid move over 43k. I expect a drop as soon as possible down to about 39 to 40,000. And the reason I say 43k is that will clear this trend line here. If we clear this trend line here, there's a good chance we're going to push up into this zone here. All right. And of course, then we fight that other battle we were talking about before up in that zone. So until that happens, we are looking weak. We are looking at losing strength, and there's a good chance we will come back down and retest this zone. This is going to be the bottom of that demand zone, so that's the supply zone. We could definitely come down and retest that. What we'll do for now, we'll just get rid of that gray box. So on the short term, the chart is looking messy. It's very, very hard to distinguish what pattern we're actually seeing over here. It is choppy, everyone's on the fence, and it's reflecting that in the price. If I had to try chart this out, well, we could see I think we had a bearish divergence here. I'm going to bring it up on the RSI. I think we had that we had that bearish divergence here. So we had increasing price, decreasing RSI, which basically was what triggered me to say that I believe Bitcoin is losing strength and we're going to continue down. Since then, we've dropped around 3% and we're continuing down. What we could potentially see over here is some formation, we'll change these lines back to black, of a descending channel. I would say a very loose descending channel. It's possible we are seeing a descending channel. Nevertheless, this bottom trend line is more speculative. This top trend line, this resistance line, is more solid, meaning that if we do get above this trend line here again, we could push back upwards. For now, I do expect the price to continue downwards. We're going to zoom out a little bit more, guys, and go to our 3 to 4 hour chart, and we'll show you what we think. So we'll bring up the RSI, we'll bring up the MACD, and we'll take a look at this price action. So what we're seeing here is we're seeing a trend line on the RSI, of course, and we have this bottom trend line forming over here. The price is coming down, and I wouldn't be surprised if we come down and retest this again. This will bring the price down to this point here, that $40,000 to $39,000 zone, before pushing back upwards. Obviously, a lot of people are screaming we are in a symmetrical, in an ascending triangle, and I do see similarities of an ascending triangle on this chart. Of course, this section here could represent an ascending triangle pushing upwards, but that will still require a retest of this zone once more. Zooming out a little bit more, we're going to go to the daily chart to take a look, and we can see that the MACD is converging back downwards. The price action is very, very representative of consolidation period right now, and we did it in a few videos ago. We showed you this RSI consolidation, and we mapped it out. We're going to map it out again for you today. We can draw it upwards around over here, and we can draw it downwards from this point here, pushing down, and we can see that consolidation period lines up more or less with this symmetrical triangle, and we can see that we did not retest the top of that consolidation. We rather rejected at a low, and we are continuing down. If we do break this level here, we are officially going to be dropping down and losing, or at least retesting this zone here once more. So I'll be keeping an eye on that. Once again, we are closer to resistance. All right, I'm going to say it again. We are closer to resistance than we are to support. If we take a look at the symmetrical triangle, we are much closer to our resistance than we are to support. So naturally, even if you buy in now and the price goes up, you're risking all of this to make this. All right, your risk reward ratio is not favorable. All right, buying right now is stupid. You wait for the breakout. All right, if we do break out here, and there's a chance we do break out here, then your risk reward ratio, all right, if we just map it out, is much greater. All right, you put your stop loss under this trend line, you put your take profit here. You can see already, this is your reward, this is your risk, much more favorable. All right, so entering now and FOMOing to the market now is a stupid idea. It will only get you burnt, and there's a slight chance it could make money, but even if you do make money, it wasn't a good investment, it wasn't a good trade, the risk was too high. And there's gonna be a lot of people on Twitter trying to pump you up, trying to trick you into buying, and you know, it comes from a place of naivety, and it comes from a place of them just trying to basically clickbait and, you know, get attention and likes and followers, and it's at the expense of your money. Essentially, it's at the expense of you. At the end of the day, if you fall for it and you buy in, you're the one who's paying the cost. You know, there's people who have been bullish since day one. They've been bullish since 69k when we've been bearish, and they're still bullish. So they're going to be bullish even if Bitcoin drops to 20k. They'll be bullish. Even if there's no turning point for these guys, they're just bullish all the time. You know, people like me, Wolves of Crypto, a few other people, we trade the trend. We wait for the trend to reverse. We base our decisions based on what the macro is looking like, what the trend is looking like, and what the data is saying. On the daily chart, we are still bearish. All right, we are underneath the 200-day moving average. We are still bearish. It is literally as simple as that. Where does that 200-day moving average line up with? It is no coincidence that it's pushing into this zone here, the exact zone that we need to flip to become bullish again. That is not a coincidence, guys. It's not a coincidence. Moving on to the 2 and 3 day chart. The 3 day chart, we can see that 200 moving average is acting as support. The problem is we have lower highs, lower highs, lower highs, lower highs. And this trend line is gonna get weaker and weaker. If we come down and retest it again, we lose that 200-day moving average on a 3 day. We are in a bear market, guys. We are already in a bear market. This is gonna put us into a deeper bear market. This is gonna confirm the next break downwards. It is literally as simple as that. There's nothing else to say. Moving on, what we're gonna take a look at now is for the new followers here, and I know a lot of people always ask me, you know, is your prediction for your bottom still valid? Blah, 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 blah. Is it still accurate? Is it still valid? Do you still think that's gonna happen? And I understand why people are asking this. A lot of people have got very bullish in the last few weeks, and we haven't ignored bullish signs. We've been optimistic, and we have been trading a lot more in the last few weeks. We've made a lot of profits in VIP. We've been trading the trend. When the trend goes up, we trade. It doesn't mean that a short-term uptrend results into a long-term macro trend change. We still believe that the 200-day moving average will be met. And I hear people like Benjamin Cohen talk about this, and other big Twitter and YouTube people, and they've been talking about it for a while. But guys, we talked about this at the top. We talked about the 200-day moving average at the top. We told you the 200-day moving average will be reached at the top. Right? We've been talking about this for months and months, and it still holds very much valid. And we can do our ratio analysis for the 200-day moving average if we take into account the time and height of the recent move. So we predict already that by July 11th, that's what we initially predicted, we will see a bottom. It could be a little bit extended from now, it's hard to say for sure, but we're gonna go off that prediction alone. So what is that? That's 119 days. So what we can do is we can take the last 119 days, we can take a look at the height, and we can copy and paste that over onto here, and that's gonna give us a pretty good understanding of where we think that 200-day moving average will be in 119 days time. All right, so that's kind of how we predicted it, and we do expect that price, if it does come down, it will come down to that point, and it's $22,000 to $26,000 was our prediction, and we can see that lines up between $22,000 to $24,000. So there's a little bit of movement room there, but that's essentially how we're predicting that. We do expect that to happen. Of course, like I said, if we get over this range here and we get over and flip it, it's invalid. That's completely invalid. We head up from there, we'll be bullish again, we'll be expecting highs. All right, guys, I hope that made a bit of sense. I hope you enjoyed the video. If you have any questions, leave them down below. This video went on for a little bit longer than I actually anticipated and planned for. I like to keep it nice and short and sharp. I did ramble a little bit, but it's all valid, it's all important. I just really want to drill in the 2 points that we talked about today. I want to drill in the fact that we are in a symmetrical triangle that is going to have to be generally assumed as bearish because we're entering from the top side. Fact number 2, the trend is weakening. Fact number 3, if we come down and retest that moving average on the 3-day chart, will crash, right? Significantly crash. And fact number 4, we're not bullish until we flip $47,000 or $48,000. If you trade on those 4 or 5 principles, I can't remember what I just said, you will be more successful than if you just buy now and hope for the best. All right, guys, hope you enjoyed the video. I will catch you in the next one.